The US stock market is gradually retreating off its all-time highs. This week, the key stock indexes closed in the red for 2 days. Does it mean the beginning of a downward correction? The domestic economy is getting back on track slowly but surely. Yields of US Treasuries have climbed for the first time in 1.5 years. Today, the market has found out that the US GDP grew the modest 2% in the third quarter, weaker than expected. Are traders going to revise their sentiment? Let's try to figure out. The US Commerce Department reported that the economy expanded just 2% sequentially in the third quarter of 2021. The actual growth fell short of expectations. In fact, it's the weakest growth since mid-2020. Such tepid economic growth was locked after the expiration of the massive relief package. The US manufacturing sector was also affected by global restrictions, a shortage of intermediate goods, and high inflation. The S&P 500 closed 0.5% down yesterday. Nevertheless, upbeat corporate earnings reports enabled the index to keep not far away from historic highs. The S&P 500 is likely to be immune even to a slowdown in the US economic growth. The expected corridor for the index is between 4,550 to 4,580. This is a narrow channel, but the market is poised to keep on growing until next week. Meanwhile, the US dollar index is trading steadily higher at near 93.90. The greenback finds support from the anticipated hawkish shift in the Fed's monetary policy that could be announced after the policy meeting. Moreover, yields of US Treasuries are rising ahead of this crucial event. These factors are making the US currency too firm. Experts reckon its index is likely to trade in the corridor of 93.80 to 94.20 with bullish prospects. While the US dollar is taking a break and oil prices are trading lower, the pressure on the USD CAD pair is easing. Today, the currency pair is trading at about 1.2365. The thinking is that oil prices are expected to continue the overall bullish trend after correction. The US dollar also will be able to assert strength following the Fed's policy decisions. So the USD CAD pair is still trading in the corridor of 1.2300 to 1.2430, but the borders could shift upwards. Crypto traders have an excuse to celebrate the victory. The bulls pushed Bitcoin back above the level of $61,000 following the recent slide. 2 days ago, we saw traders opening huge long positions. A lot of crypto investors decided to buy tokens during the correction. They will earn $1 million profits on a rally in the near future. Now they are waiting for the next bullish round. Betting on Bitcoin growth up to $62,000 or even $64,000 per token. At the end of the week, trading sentiment will depend on the market response to the US GDP and unemployment claims. Sadly, the GDP did not meet expectations that would put pressure on the stock market. On the other hand, this would support the US dollar. Tomorrow we will find out how exactly traders responded to the news. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.